Hello and welcome back, everyone, to Perfect Spiral Capital. My name is Luke Tatum. I'm an authorized infinite banking practitioner, and I'd like to talk to you today a bit about one of the common things that we discuss on our team. So, Perfect Spiral Capital, we are a life insurance agency. And one of the things that I find myself talking about with our agents a lot is this idea of, kind of how is your life different once you've fully implemented the infinite banking concept in your life, in your family's life. What starts to change? How is that awkward when you're dealing with people that don't do this? It's honestly a big topic. So, first of all, the way that you finance things, I mean, I think fundamentally that's the core difference, right? If you go buy a car, the average person is going to get a loan, a car loan from the dealership, from their credit union or bank. They're going to shop around for the best possible interest rate, and they might finance it over a long period of time so that they can save on their monthly costs, right? Okay, what is the cost every month? That's not how I think about things, and that's not how many of our clients think about things anymore. One of the biggest insights that Nelson Nash has in his book, Becoming Your Own Banker, is to think about the volume of interest that you're paying on a loan, not the percentage rate necessarily. I mean, obviously, if you have loan A and loan B, and they're both over the same duration of time and they have exactly the same interest rate and exactly the same repayment schedule, then the lower interest rate is going to be better. But what I'm talking about is how you have your loan in the first place. If you're using the infinite banking concept, you have a dividend paying whole life insurance policy. If you have one from us, it's going to be a non direct recognition life insurance policy. If you're not sure what the difference is on direct versus non direct recognition, we have a video on that, and it'll be linked in the description box below. But to continue for now, what that basically means is that you will earn the same dividend from this policy regardless of whether or not you have a policy loan against it. Okay, great. So that means you're going to use a policy loan to finance, say, this car purchase that you might be making. If you're making a car loan, you're financing it with a policy loan, how is that different? Well, you don't have to ask for permission to get that loan. It's not, okay, I wonder what my credit union can do for me. I wonder if they can beat the rate of the car dealership, Chevy Auto Finance Corporation versus, ABC Bank or ABC Credit Union, right? It's just, oh, okay, cool. There's an interest rate attached to it. No big deal. Policy loans don't work the same way that other loans work. You don't have an expectation that you make a monthly payment along a certain schedule. You don't choose from a 3-year loan, a 5-year loan, and a 7-year loan. You just get the money because you've already capitalized and built up this policy. It's an asset that you own and control. You actually have ownership of this policy before the insurance company has it. It's your policy, not theirs. And so when you need a policy loan to finance something, you request the funds, they are sent to you. End of story. So you receive, let's say, $20,000 to buy a used car. Okay, great. When you do that, the loan balance starts at $20,000 and increases over time as interest accrues. There is interest on the loan. It's common to hear people say that with infinite banking, there's interest-free loans. That's not true. I'll make a separate video about that, but it's just not true. There is an interest rate. And if you're doing non-direct recognition, where you get the same dividend, regardless of how much you loan out, then it's going to be a variable interest rate. Don't be scared off by that, though, because you can make repayments over any schedule of your choosing. It's entirely possible to take out a $20,000 loan and keep it out without making any payments at all for years and years and years. You do want to eventually repay the loan. I'm not recommending that you do it that way, but it's a different mindset. For me, I have uneven income. And so when we make money, we pay off policy loans, we put more money into our policies, we store our wealth in these policies. When we need money, whenever we have a cash flow crunch, whenever we've got a big unexpected bill, those kinds of things happen. Guess what? We take a policy loan. When we need to buy a car, we take a policy loan. Anytime we have above say the next 5 weeks worth of expenses in the bank, we get it out of the bank. We put it in our life insurance policies. So it's a cash flow tool. That is not how most people think about finance, right? You go into the car dealership. This is the ordinary mindset. You go into the car dealership, you pick out the car that you like. Okay, well, we can afford $750 a month. Well, how much car will that get me? Can I get this one? Oh, I'll have to go 1 year older than I would have liked. Okay, no problem. That's not at all the same thought process. And so infinite banking, one of the virtues of it is that it trains you to sort of think longer range. It trains you to sort of build in certain assumptions into your financial decision making. It's an enforced savings plan, if you want to think of it that way. This can have profound impacts over time because, your neighbor goes and buys a $20,000 car, they sign up for monthly payments over a period of years. When they pay off that car, they have the car and then they've gotten rid of all that money. If they hold it long enough to pay off the loan, even, right? Because a lot of times that doesn't even happen. You sell the car before you're done paying for it. But if they have, if they make the 7 years of payments and they get the title to the car, then, they've paid a lot of interest. They've made monthly payments for a long period of time. And they never probably thought about what the total volume of interest was over that time period. You have your family doing infinite banking. You've built up this asset. You can use it for whatever you want. You decide to buy a $20,000 car. Let's say you and your neighbor buy the same valued car at the same time. Okay, well, when you get close to paying off the car, when you're repaying your policy loan, first of all, to the car dealership, you paid cash. You took out a policy loan against your life insurance policy. They just sent you the money. So you just walk into the dealership and say, here you go. Here's the money. You have a cashier's check or whatever it is, but you just have the money. And then you repay it to the policy. So you own the car free and clear at the very beginning. That's a big difference. But also, this kind of plays into when your cash flow is good, when your cash flow is bad. You can manage this however you want. But let's say it takes you a few years to pay it off. No problem. Every time you make a payment on this, car loan, which is really a policy loan, every time you make a payment, it's 100% to principal first. The only time you're actually going to pay the interest on this loan is at the end. You took out $20,000, the first $20,000 of repayments that you make are just principal payments. It's 100% principal. That means that if I send a $1,000 check to the life insurance company to repay my policy loan, then I have $1,000 of cash value available again to go get something else, to buy an investment, to buy whatever we need. So you don't end up where, okay, we have enough money in the bank. Let's clear out the car loan so that we don't have that looming over us anymore. If you do that in real normal life, then what happens? You go, okay, we don't have any money left in the bank. Nobody have any catastrophes. Nobody freak out. We've got no money in the bank, but the car is paid off. Wow, that's great. Monthly payment's gone. With IBC, you send that last check, you pay off the policy loan, and then 2 weeks later, approximately, it's available again. You see what I'm saying? It's like a line of credit more than it is a loan to pay off an asset. And so it has profound impact. That's one example. Using this can really help you accelerate debt repayment. It can really help you accelerate debt consolidation. It can really help you accelerate being, completely debt free. And you start to lean into this, you start to use it again, and you go, wow, this is the most useful financial tool I've ever had. It's actually helpful as opposed to a headache. Right? So I would say that's the primary difference. You start to do this stuff though, and other people are going to think you're crazy. What do you mean you send all this money to the life insurance company every year? I mean, personally, we pay tens of thousands of dollars in life insurance premiums a year, and I'm glad to do it. I want to pay premiums. I'm excited when my policy payments are due because it means that I'm getting further into my plan. I'm accelerating the growth. The compounding is coming into the present, and it's building the value in these policies and opening up more areas of opportunity for us. And it happens all the time. My policy's value increases on a contractually guaranteed basis every single day. That is not what other assets do. As with anything, I have to stop myself from just rambling for a very, very long period of time. But you can see how this is not how people think about financing things. It's not how people think about financing cars. You can think differently about how you finance things when you own essentially the lending house. When you own the source of the loan, when it's an asset that you control, you have the flexibility to do what you need to do. It's a world changing, a worldview changing asset. And if you'd like to learn more about this, I highly encourage you to check out my book that is Between the Lies. You can find it at betweenthelliesbook.com. I am also the narrator of the audiobook. If for some reason you like listening to my voice, I read the whole thing. It's almost 5 hours long, and that's available on Audible. All those links are going to be in the description box below. If you have questions that you can't find an answer to online, again, please reach out to us, perfectspiralcapital.com. Go to our booking page and pick one of our agents. We're all more than willing to help figure out what is going to best fit your family's situation, your business's situation, your nonprofit situation. Whatever the situation is, there's a way to lean into this strategy and to see what transformative power it can bring to the table. Thank you all so much for watching, and I'll see you in the next video.